With all this money printing, what are you going to do to protect yourself against inflation? And we're going to talk about it today. Hey everybody, I'm Zach, the Money Nutritionist, and if this is your first time to the channel, I love to talk about all things real estate and finance. So if you're interested in one of those two things, make sure to subscribe to the channel and let's jump into the info. So if you're watching this video, obviously you like to follow economics or business or real estate or finance. You're the type of person that follows these things. And if you're an American, you've noticed we've been printing tons of money, not only during the pandemic, but over the past few decades, and it will probably continue. So the worry many people have right now is one, will our money become devalued? And two, inflation. So what I want to talk about today is what we can do to protect ourselves against inflation, because most people are saying it's coming. I think it's coming. So what are some things you can do to hedge yourself against this oncoming inflation bubble? So first off, what is inflation? Inflation is basically an economic term that means there's going to be an increase in prices, which means your money has less purchasing power. In the United States, we have the CPI, or Consumer Price Index. This is produced by the Bureau of Labor Statistics, and what they do is they survey tons of consumers, they survey tons of businesses, and they come up with this CPI number, and that typically will tell us what the inflation rate is. Now, it's important to understand that the inflation rate is just a rate of growth. So, for example, what's the growth of the prices? Let's say in year one, inflation is 3%, and in year two, inflation is 2%. That doesn't necessarily mean inflation has gone down. What that means is in year one, it went up 3%, and in year two, it went up 2%, for a total of 5% over 2 years. So inflation is measuring how much prices are going up, and typically it's anywhere from 2 to 3%. But why does inflation really matter to you? Okay, things are getting more expensive. We know a loaf of bread used to be 50 cents, and we know a loaf of bread for a nice loaf is about $5. But why do you care? Why does that matter? And it should matter if you have a retirement account, because in 30 years when you retire, or if you're going to retire at say 65, sometime relatively soon, but you're planning to live until you're 90, 95, you need to know how inflation is going to impact you in your retirement accounts. So why do you need to know this? What's the impact? What you need to know is that inflation means your money can buy less. So if you're going to retire, you know what? Scratch that. When you retire, or when you're too old to work the way you used to be able to work, the money you have saved up, or the money in your retirement account at that time, will continue to have less buying power as you age and as you draw that money out of your retirement account. So you have to be thinking to yourself, I need to make sure that that money is, for one, growing, and that for two, that that money doesn't become devalued, and that the $2 million I plan to have when I retire isn't only worth $250,000 at that time. That's a big deal. People have to survive off their retirement accounts. And you're not the only one who recognizes this. The government recognizes it, and that's why Social Security typically will keep pace with inflation, but actually we've had deflation and inflation hasn't been that high over the past few years, so they haven't had much impact when it does come to Social Security. If you're the type of person banking on Social Security, what you need to know is that Social Security may or may not be there the way that it is 30 or 40 years from now. And also, Social Security only makes up a small percentage of what you need to survive when you are retired. So take in mind the life expectancy, because right now the average is 78.8 years. That's the average for how long an American lives. But suppose you are retiring at 65 and you're going to pass at 95. You need 30 years of an investment egg. So you have to have enough money to survive over those years, especially if you can't work or if you become, sick or something of that nature, Now, COVID did mess up the life expectancy number. It did drop because of COVID, but let's say you're healthy and you don't catch COVID, you're looking at 78 years old to be the age at which you pass. So you have to ask yourself, how much money do I need to live off of once I retire? And this is where an estate plan will come into play, because your estate plan should account for that inflation. Although there are some things that outpace inflation, and healthcare is one of those things. For example, in 2018, the inflation rate was 2.4%, but healthcare, the prices went up 4.6%. And if you just look around, everyone knows healthcare is stupid expensive. I don't see any signs of it getting any cheaper. So that's another thing you have to prepare for is in retirement and as you age, those things like healthcare are going to get way more expensive. So I've been talking about all these negative things, what to worry about, what inflation is, what the government's doing. What do you need to do? What do you need to be concerned about? Well, what we know you're going to do, and what most people do, is as you age, you'll become less risk averse. So you're not going to be risking too much when you get older because you need that money to survive. So you're not going to go dump it all into a new cryptocurrency. You're probably going to put more into bonds because bonds are going to pay you. So these are strategies that will change as you age. So as you age, and actually now, you should always be diversified. And I'm not saying as you age, you're not going to have stocks. Of course, you need stocks and dividend-paying stocks. That will be part of your portfolio. But what can you do to protect yourself against inflation? And here are 3 things you can do. The first thing you can do is purchase Treasury inflation protected securities. These are called TIPS. So what is a TIP? Basically, a TIP is a bond that pays you a fixed interest rate. So as inflation rises, the money you have loaned to the government will pay you a fixed interest rate as if you are a bank. So with inflation goes up, that rate goes up. So it helps you in times when inflation is increasing. It's not so helpful when inflation is low. Nevertheless, TIPS are good to have in a fixed asset portfolio along with all the other stuff you're doing. It's just a good hedge against inflation. The second thing you could do is invest in real estate investment trusts. These are called REITs, and a REIT are basically, think of it as a mutual fund. REITs are essentially mutual funds that own property and different types of property. They're collecting rent, they can sell properties. So when inflation happens, real estate is a good hedge against inflation. That's one reason I'm buying real estate, because as inflation increases, property values typically go up and rent can go up. So you're still pulling in money. Those companies that own a lot of real estate are still pulling in money. So if you invest into a REIT that owns real estate, they can pay out monies because you've invested in them, and it will protect you against inflation. And the third thing you can do to protect yourself against inflation is invest into alternative investments. This would be things like private businesses or into hedge funds, although that's typically for, the super wealthy or an accredited investor. But you could also look into Bitcoin. That's what many people are doing now as a hedge. You could also invest into the typical silver or gold, which is another good hedge. So with these options, you can protect yourself against the oncoming inflation and hopefully protect your retirement account against those rising prices during retirement. The important thing at the end of the day is to make sure that you are saving, that you're compounding your savings and making that into a big nest egg that you have at retirement so you can live 10, 20, 30 years. Once you decide, hey, I don't feel like working anymore, I'm gonna write a book. And I wanna make sure that you're protected. Make sure to talk to a financial advisor. Drop any comments or questions down below, and I'll see you in the next video.